Hey, what's up, guys? This is my second YouTube video. I want to start by saying I'm not a financial advisor or financial professional or anything like that, and this is not financial advice. My goal is more to talk to new investors and to tell them what I'm doing and to get them excited about all the long-term opportunities that are in the market right now, especially during the current market sell-off. So obviously, no one's really excited about the current market correction, but for new investors, it's actually not the worst thing in the world because it's an opportunity to add some of the best stocks in the market to your portfolio at a nice discount to where they were just a month ago. If you're just starting out, one way you can do this is with an exchange traded fund or ETF. This is especially useful for new investors as you don't have to pick a single stock to start out with. ETFs gives you instant diversified ownership of a basket of stocks. It could be dozens of stocks or even hundreds of stocks all in one investment vehicle. A good one to start with is the Invesco QQQ Trust ETF, ticker QQQ, as you might guess from the name. You probably hear people talk about this sometimes. They sometimes refer to it as the Qs, and it's one of the biggest and most popular ETFs in the market today. You might have heard of the NASDAQ, which is one of the US's most biggest exchanges. It's widely viewed as the more tech-centric and growth-centric exchange compared to the more old-school Dow Jones Industrial Average or the broad market S&P 500. So QQQ simply invests in the NASDAQ 100 index, an index of the 100 largest non-financial stocks listed on the NASDAQ, as you might guess from the name. So this includes almost all of today's top tech stocks, whether it's Amazon, Alphabet, Microsoft, Apple, Meta, the semiconductor stocks like Nvidia, Broadcom, Tesla's in there, and many more. And right now, QQQ is in correction territory. It's down about 12% from its 52-week high. So if you're sitting on the sidelines last year saying, I wish I could buy these stocks, but I missed out, it's too late. Well, now you have a chance to buy them at a bit of a discount to where they were just a few weeks ago. And check this out. So QQQ has gotten hit pretty hard over the last month or so as the market has sold off, but it's generated some pretty amazing returns for investors over the years. As of the last monthly close, QQQ has put up an annualized 3-year return of 14.4%, an annualized 5-year return of 20.6%, and an annualized return of 17.6% over the past decade, which are all pretty ridiculous numbers, which I'll get to in a second. So not only are these returns easily beating the broader market over time, they've generated some serious wealth for QQQ's holders. So you could look at it this way. If you bought $10,000 worth of QQQ 3 years ago, you'd have $14,951 today, which obviously isn't bad. If you put $10,000 in 5 years ago, you'd have $25,497 today, more than doubling your money, and then some in 5 years. Even better, if you put $10,000 into it 10 years ago, you'd have over $50,000 today, making a 5x on your money just by buying and holding this simple ETF. So investing doesn't have to be complicated. You can still succeed in the market with just buying a simple, popular ETF like this. So of course, past performance is no guarantee of future results, but QQQ has an awesome track record, and usually these types of long-term winners continue to keep performing well in the future. So it's not a bad idea to buy the dip on them when the time comes, like we're seeing now. The other reason I think QQQ is a good foundation for new investors to get started with is that it offers exposure to all of the market's most exciting themes and the themes that investors are going to get excited about again once the market rebounds. It gives you exposure to semiconductors, generative AI, quantum computing, self-driving cars, EVs, robotics, and more. You even get exposure to some of the slightly less hype but still lucrative verticals like cloud computing, enterprise software, and more. So these also aren't like speculative moonshot companies. You don't need to get too fancy right now and try to get ahead of your skis in these market conditions, especially if you're just starting out. You don't need to get too risky and go with like a pre-revenue or pre-earnings company like some of the stocks that get hyped up on Reddit and Twitter. You can get exposure to quantum AI, self-driving cars, pretty much all of that with companies like Alphabet and Nvidia, which are some of the world's best companies, and they're not going away anytime soon. They'll be here for a long time. So that's why I think QQQ is a good place to get started. When you're looking at ETFs, you also want to look at expense ratios. QQQ charges an expense ratio of 0.20%, which means that if you're putting $10,000 into the ETF, you'll pay $20 in fees on it over the course of a year, which isn't, it's not too bad overall. The price of QQQ is about 477 right now, so $477. If you don't have almost $500 to throw in all at once, or it sounds prohibitive, that's all right. Remember that a lot of brokerages like Robinhood and others allow you to buy fractional shares now. So if you have $100 you want to invest, or even just $50, you could get started with that. And don't feel bad or don't feel like that's not enough. Remember that the biggest journey always starts with a single step. So imagine you put in $100 now, maybe $100 or so. When you get paid again in 2 weeks, you get $100 for your birthday or graduation or Christmas or whatever, and you throw that in. Rinse and repeat, and pretty soon you'll have a real portfolio on your hands, probably before you know it. So remember, the people that put $10,000 into QQQ 10 years ago have $50,000 now. So that could be you in the future if you get started. Anyway, the market is down, but it's a good opportunity for Zoomers, millennials, and younger people in general to get started. If you've just getting started and you don't know where to begin, check out QQQ, which I think is a really good starting point. It's down about 11-12% from its high, so you could get it at a pretty decent discount to where it's been, and it's created some great returns for its investors over a long period of time and established a good track record. Investing doesn't have to be complicated, and this is a pretty simple, effective way to get started, in my opinion. You don't need to overthink it to succeed in investing. Again, this isn't a financial advice, and I'm not a financial professional, but I just want to get people motivated about investing and show them that they can do it. So this is my second video. I'm planning on making more videos like this. Hopefully the quality will improve over time as I work on it more. And if you enjoyed it, hit like, subscribe, and I'll see you soon. Thanks for watching.